Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply 6636. It looks like it's going down. Show me that chart.
Noah, it is going down. I mean, we've just had a ton of weeks now where it's just going down. And so I don't think this should be a
Yeah.
surprise to anybody.
No, we've been talking about the net deficit of inventory, and that net deficit continues. We'll show you why again once we get to the weeklies. It is what it is until it isn't. But let's check out demand, John. Pending sales 5270. Show me that chart.
Yeah, so that's about down 2% from last week. But I'll tell you this, Noah, down 2% is a little bit better than the supply, which was down 2.3%. So even on these macro levels, pending sales are outpacing supply.
Yeah, supply is falling at a faster clip than pending sales, and that's why the market pulse is lingering at this 0.79 and not really falling. It's because the options are just going down. It's just the way it is. Let's go to the dashboard and see if the weeklies tell us any kind of a different story, but here it is. Supply 327, John, this week. For reference, let's see what that chart says.
Yeah, that's down roughly 7% from last week. Now, last week, again, was up 5% from the week before. So net, they're sort of flat, but the trend is down.
The trend is down, and that's what we're looking at. Let's move on to the measure of demand. 285 things still got signed into contract. It's a lot, but we're down. Call it the summer. But again, this is a lot of stuff. Johnny, show me the chart.
I mean, you're right. No, we're down. We had 310 last week, and we're at 285 this week. These are the problems that I think most brokers would like to have. That if that's the decrease you're talking about, great. That being said, I mean, listen, we are still putting a lot more into contract than is coming into supply.
Yeah, and this is liquidity. This is the bids. This is deal volume. So, like, if I had to describe what the summer market is, it's liquid. It's a liquid market. There's activity out there. Sellers, you got to understand, if you're not getting the activity that you're hoping for, maybe your price is just a little too far ahead of where the market is, and the market's just not there yet. I think that's basically the root cause of what's going on is sellers think that if liquidity is back to 2015 crazy levels, aren't prices back to 2015 levels? And the answer is no. We're kind of back at 2019 levels, and we just made up the COVID discount, and we're somewhere around there. So that's the reason. Very interesting, John. Let's go outside the scope of UrbanDigs. Let's go into the data for this week. This is going to be measuring the gap between renting and buying. And John, please explain how you calculated this very clearly so that users know what they're looking at here.
Well, we're just trying to see, like, how much do you have to pay every month? Like, what comes out of your pocket for renting versus buying? And what is buying? What do you have to pay for? You've got to pay, if you're a co-op, you got to pay your maintenance, and you got to pay your mortgage. If you got a condo, you got to pay your CCs, your taxes, and your mortgage. So we're assuming you've got a mortgage. We're assuming you pay 20% down. How much are you going to pay on a monthly basis for a co-op or a condo, simply compared to a rent of the same sort of bed count?
Right. So we're breaking this out by bed count. So let's just first bring out that we're looking at studios right here.
Mm-hmm.
And this is going to be a consistent theme for the next minute and a half or so. The yellow line is your condo.
Yep.
Right. This is your condo level. The red line is your co-op level. And then here is the level of where it is to rent. And this is going to be a consistent theme. Like, it's always going to be the condo at the top, the co-op in the middle, and then most likely the rental price right below. So it is costing more money to buy versus rent. I guess I'm looking at the trend, and I could see the studios are starting to go up in terms of rental rates. So that's notable. And when I look at the buy, like, there's nothing going on in terms of going up in the studio sector. It looks like it's kind of down, right?
Yeah, and I think that's the way to look at these charts, though. It's not necessarily, seeing what the actual level of these numbers is. It's more the relationship between the numbers. We know it's going to be more expensive to buy a co-op or a condo versus renting in pretty much every category. But the question is, how do they compare? And as that spread between renting and buying narrows, it's kind of, to me, it's a buy sign. It's sort of an idea that, all right, yes, renting is still cheaper, but going forward, the decreased cost associated with buying might come in handy in the next, say, 10 plus years, or however long you're going to stay there.
Very interesting. Let's shift this over to one bed, John. When you're looking at this one bed, you're looking at the spreads, you're looking at everything. What do you see here?
Well, it's interesting here. I see the spread between the condo and rent line are sort of moving in parallel up there, but co-op seems like it's kind of going sideways there. So to me, if I'm trying to figure out, well, where's the value in the one beds right now, the answer would be co-ops.
Very interesting. So the values in the co-ops with the 1 bedrooms right over here. Very interesting. We're looking for value. Let's go to the 2 bedrooms and look at the 2 bedroom chart. And again, looks like co-ops is kind of going sideways. Condo is kind of rebounding a little bit with the rental market.
Yeah, I think so too. And bear in mind, I think the condos and the rental market trade a lot faster than the co-op market. So
Right.
we could see some changes as this data sort of evolves. But
Right.
right now, I think that's an accurate assessment.
Right. And finally, the 3 bedrooms. It's pretty clear right now. You could see that the recovery in the larger apartments in the higher price points is showing a bit more dramatic rates of recovery going on right there. But then again, when I look at the rents, I'm not seeing any increases in rents in that sector. I'm seeing it's kind of mixed bag, flatline. Is that what you say, John?
It is, and it's interesting, and I'm not quite sure why we're seeing that. I mean, we did see, when we first started looking at where the rents were post-COVID, some of the first recovery we saw was in the larger apartments, and they seem
Yeah.
to have stalled out. And I don't know if that's a
Right.
demand thing. I'm not quite sure. But if
Right.
if I go back to the buying numbers here, if I look at that co-op line, it's increasing at a much steeper rate than the condo line. And that also to me is
Right.
interesting. I think that these could be artifacts from a smaller data set simply because there's just not that many larger apartments compared to smaller apartments. But it's interesting
Right.
nonetheless.
Very interesting. Yeah, it's interesting to look at it in this capacity. We usually don't look at this kind of stuff. I'm really curious if there's any brokers out there that would like to comment on what they're seeing. I love hearing those anecdotes from in the field right here.
Yeah,
Tell me whether or not you're getting any messages from this visual, and if that's true, based on what you see in the field. We love that kind of stuff. But John, thank you for bringing up this data. Very interesting. That's John Walkup. I am Noah Rosenblatt. We're both from UrbanDigs. Please don't forget, if you got questions, we got answers. Please visit our forum right down here. Other than that, have yourself a wonderful Friday, and we'll catch you next time.